Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market began to stall this week as investors plainly got tired. After selling had rocked the markets in fear of the trade war and the border wall war and the shutdown and interest rates going up, well, back at the end of last year, traders went bargain hunting then in the last several weeks. And the market got pushed up very strongly. In fact, about a 17% rebound off of its lows. The way the percentages work, that regained just over 50% of the losses that we saw at the end of last year. That was helped by decent earnings reports and overall central banks facing slowing economies throughout the world. And when that happens and they ease, well, investors do tend to want to buy based on that ease. World growth does keep getting downgraded. And based on the data that's coming out of the Eurozone, they are potentially already in a recession. ECB is on hold, Italy clearly in a recession, and with the Fed on hold and India cutting interest rates and the Aussies doing the same thing, we have central banks making a very, very fast turnaround here. And now investors are in a quandary. Do they buy stocks based on easy money, or do they sell based on the prospects of a recession and falling earnings and potentially much slower economies going forward? We think the story has already been told, and we have a worldwide bear market going on right now. The bear probably just went back into hibernation for just a little short period of time, then to wake up again and do the ravaging that bears do. And if you don't believe that it's a bear, I just want to show you something right in here. Most people think that the stock market, had a peak and fell about 20%. When you look at the decline that came from last fall, it actually is a different picture when you look worldwide at the equity markets. Here's the Vanguard Total World Stock ETF and our cycle analysis on this particular ETF, which shows all stocks essentially. And you can actually see that the peak right here for the VT, this index, was in January of 18. Note the long bull market that came off of any mini bear that we had back in 2016, and this long upward bull move that we had. But then things started to change, and you can see our cycle analysis in the bottom. These are our ideal cycles in here, and how they actually became the real cycles right in here. And look at the breakdown that occurred right. You see that line there? That's called the VTL. That breakdown brought this big decline right into the perfect timing right here, and then the rally right there. So this was a worldwide bear market that really has already been over a year old, that fell about 22%, and now we're getting this rebound. Note these resistance areas right there, the major 50% and the intermediate 61.8, all falling in around the same place right there. And yes, the projections are that this is where the markets fail and then begin to move to the downside again. You can see our fib extension target zone way over here, which doesn't have to be hit this May, where this is pointing to. It just may decline, not get that far, and keep moving in a zigzag on the downside, because we've told you we think that this bear market that you clearly see right over here, with just a modest 50% rebound right there, we think that bear market's going to go all the way into 2020. So this is really just what we think is the beginning of it. And if you didn't think that there was a bear market in stocks, well, world stocks pretty make that clear. Coming back about halfway, well, that's pretty normal. And sometimes when bear markets make tops, or bull markets make tops and bear markets start, they even rebound stronger than that before the next wave of selling comes in, because the bulls still think that everything is okay. So what's next? Well, I think it could be really ugly. Let's take a look at the ES. That's the 60-minute chart of the S&P 500. Not a lot of news actually this week to move markets, and you'll see in here that the market tried to do better early on during the week and then rolled over and then did a lot worse. The market got help here as Apple rallied $5 right over here, and it drove the NASDAQ higher on Monday on a speculation coming out that they would use some of their massive cash holdings to buy Netflix or some other tax. Netflix was up $11 on that news, and there was that big move right there. Google reported earnings after the close, and they beat, but their costs were sharply higher. Their acquisition costs to get people to come to their site, and then the market started to do poorly. But then it did better as Apple rallied again, as they came up with a deal with France on their back taxes, and that lifted the NASDAQ. But then we started to get choppier for the week into the State of the Union, which did nothing for the market whatsoever. Very little happened in here. But then overnight, Wednesday morning, the news came out of very weak Eurozone data. The European stocks got sold in here. Microchip came out, lifted the semiconductors temporarily in the morning on Wednesday. You got some pretty good movement in there, but then the video game companies began to come apart, really break down on poor earnings. I'm going to show you those stocks as we get into our worst for the week later on in the show. I have lots of stocks to show you in here, and you're going to be very interested in seeing them. Interesting little diamond formation that you could see right there, and then it began to move down again on Thursday. Eurozone, EU sharply downgraded growth to 0.2% from 1.2, and that's when India started to cut interest rates and the markets really started to come apart. Here you could see on Thursday morning there was an attempted rebound, but at that time news came out that Kudlow came and said that trade talks were a sizable distance apart. There was some distance to go. That's where they stand, and the president, our president now, says he's not even going to be meeting with their president before that March date. That's problems as far as trade goes, and we had this big decline. You can see this 2-hour decline here, the biggest decline of the week. We got a rebound late in the day on Thursday, but then on Friday, again, world growth concerns because of weak data coming out of Germany, and we got the market moving to the downside again in here and trying to stabilize here at midday here on Friday, you can see, but overall, pretty much as we figured the week would be, down on the week as it rolled over and then began to sell off into this second half of the week. You'll get a good sense for what I think is going to happen moving forward as you watch our short-term view for the coming week, which is coming up, of course, at the end of the show. Stock market for the week, fractionally lower. The bond market, 30 years gained about 0.75 of a point, and 10 years fell about 6 basis points to 2.63%. Gold down about $4, and that's really firm relative to the fact that the dollar was stronger, and really speaks to the fact that there are buyers out there in gold. We've been bullish on gold, and it's been correct. And we still think that gold's got higher prices, and maybe significantly higher prices to come. That will come when the dollar finally gives way to some very large declines we think are coming later in the year. Dollar up about 1% on the week, and moving up away from what we thought was a danger area technically. Glad to see that, because we want to see our analysis work out. And the oil market loses about $2.50, which was also in line with what we were expecting. This decline in oil also, and I'll show you, probably still has more to go as we look at our short-term view coming up soon. That's it for the opening, and we're going to be back shortly, and I'm going to bring you lots of things of interest. Interested in raising your knowledge of the technical side of the markets, whether you're a trader or an investor? Well, our Tools for Techs segment of our huge video library will help you with that a ton. You're going to learn about charting and explanations of studies and how to set up charts and combinations of studies and so many things that will help you as you look at a chart really understand what's going on in that symbol or in that market. I'm going to show you a partial list right now of our library that you can see right here. This is nearly 40 videos of the nearly 80 videos that we have just in this particular section of our library. Just this week we did one on improving swing trading entries, and let people that are in level 2, 3, and 4 get these videos. You can see improving entries, charting basics, candlesticks basics, IDing overbought and oversold conditions, counter trend trading, and just so many more that you can see there. From my 44 years experience as a trader, there is just so much in here for you to learn. And also we have 400 videos in our library in these 8 different segments, and you can see Future Speak on Wednesday, where we do our cycle analysis on 24 different futures contracts. These tools for text that I'm telling you about, Trader Psychology, which we have about 25 videos in there about the personal side of trading, IRAMO for longer term strategies, and we look at different stock sectors of the market. Do that one very often. You get a great feel for the groups. Big picture analysis, where we look at the major markets, style, strategy, and plan. Just a lot of subjects about trading in many different aspects. And of course, our Market Week and Short-Term View, where we have our archive in there. You can go back and review what we're looking at for the 5 major markets, plus best and worst stocks for the week. All of that unbelievable that you can have, including our level 1, which is our stock index report, and our new, which you'll be able to get a peek of, ETF report, and so much more coming. All of that you can try for just $18.50 for 1 month. That's a half-price trial. You can cancel it at any time. If you're a first-time member, you really want to get a feel for what we are doing in the markets and really learning so much. Well, just become this level 2 member, and you will just have such a great opportunity. Nearly 400 videos that you can watch. You're never going to be able to watch this much and be able to learn so much unless you pay thousands of dollars. Well, forget about that. Only $18.50. You want to get our special link, just write support at askSlim.com and ask our support team for that special link for only $18.50. Unbelievable how much learning you'll be able to do as I share all of my experience from all of these decades. Please do write us and try this out. Thank you. All right, for the best of the week, what I do every week is go through my universe of over 300 stocks, look at the cycle analysis, and look at what were the biggest movers in either direction. Try to explain that to you so that, well, you know what to do next. It's always like, what, the big move came, so what do I do now? And that's what I try to do, explain that to you. This again is cycle analysis. This is the rhythms of the market, or the heartbeat, and that's what my analysis is based on. You're going to see that here as we look at Skechers right here. Skechers is a stock that was the biggest upside mover of the week, and this is a stock that was beaten down pretty good. You can see in here as the cyclical patterns are really very clear. Cycles are measured from low to low, and on the bottom these cycle brackets are the ideal rhythms, and you can see actually how they resolve themselves on the chart because we put the actual cycles up on there. As you can see, low came here, low came here, right on time, got right down to that fib extension area that we were looking at, and then got a rebound. Now getting above that last peak over there is a good thing, but it got into the resistance area right over here. Skechers earnings good. They missed on revenues, however. And what's interesting is that Wedbush raised their target to 31. Well, the stock's trading at over 31 this morning, so got up to almost 33. So kind of weird on that one. You can see that we think the rally is going to peak in here, maybe getting to 34 to 35 up here, and then getting into a corrective period. We think the real time to buy this stock will be in May. Yes, that kind of lines up with what we said to you for the world markets pulling down into that period in May. So this just coincidentally lines up that way. But Skechers got this big move on the upside. One of only 6 stocks I'm going to show you that had pretty good bullish moves. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you will get special Level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and of course, more specials along the way. Become an askSlim.com Level 1 member, no cost to you.
I'm going to the city and I'm going to a city.